everyone to the Ultimate Trading Webinar for Beginners. I'm Dan and we can finally hit the road. Just before we do so, it's important to note that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. And as I said, we're going to open the webinar with a introduction to the company. And as many of you know, we're here nearly 2 decades. We are a licensed company with 9 licenses worldwide. And if you got any question regarding anything along your journey, we have our customer service available here, available for you right here at the bottom left. As I said, this interface is called the Web Trader. We're going to have the webinar on it today, Web Trader. We also have it on the app. It's called the AvaTrades Trading app. And if you're using this interface, you can easily access the customer service via the chat here or on the WhatsApp, whatever you prefer. But if you're using a different interface, you can just message us through cs@avatrade.com. Now, regarding trading queries or questions, basically everything under the trading umbrella, a senior account manager can assist you along your process. We don't charge anything extra for this dedicated service. So if you don't have a senior account manager and you've made a deposit, what you want to do is get onto the either the chat or contact customer service and ask for a senior account manager to contact you and give you assistance. All right, so as I said, we're going to have the webinar on the Web Trader, although we have other platforms as well that I would like to mention, which is MetaTrader 4, MetaTrader 5, Ava Futures, Ava Options, and Ava Social. I do want to say a couple of words about Ava Social since this is a webinar for beginners, and to my opinion, Ava Social does have a very, very efficient features that can be very useful for beginners and for others, other level of traders as well, which are follow and copy. This is a great solution. I'm going to show you now with a quick comparison why. So let's suppose that we are trader A and we would like to follow trader B. And let's suppose that it's trader A, we are a beginner. And we're not 100% sure if it doesn't have to be a pro. Again, we're just using this to emphasize, to convey the message here. So if we're trader A and we're following trader B, what will happen is basically we're going to get messages such as similar to receiving a signal with what trader B has done, what position trader B has taken, and we can basically do it similarly. So we can take the inputs, we can take the notification, and then again go onto the market, open the instrument, and then of course we can take the position the same way that we received it on the message. But we have to do it manually by ourselves, and it's not it's not happening automatically. From the other end, if we're using the other function, which is copy rather than follow, okay, what will happen is the automatic trading will take place instead of us opening the positions. So follow means we're going to get messages, we can open the positions by ourselves similarly, and copy means that it's automated trading without us opening the positions. Of course, at any point in time, we can go into the history and we can review what trader B has done and what is happening in our account. Now, a very nice thing that you can do in Ava Social is that you can also determine the difference in lot size. That means that, for instance, if trader B has a account like this with $10,000, but we're just in the beginning and we don't have $10,000, we maybe have 100 or 500 or 1,000, okay, whatever other amount we have. What we can do is we can choose to still copy the strategy, but with a lower lot size. That means that we're going to get the same strategy, same analysis, same process, but with a lower lot size, which gives us the ability to basically enjoy the strategy, but using less margin. Okay, we're still not sure what margin is since we haven't got to that yet. But for the people who has a little bit of experience, I'm sure that it makes sense. If there are any questions until this point, guys, feel free to fire away. I guess that you guys noticed that I'm going in a certain pace since there is a must content that I want to give you during the webinar. But if you got any questions along the way, feel free to fire away. I see everything on the question section. All right, what we're going to do now is we're going to look to the left. We have those several menus in here that we would like to explore. We'll fold it down. In here, in the beginning, at the top, we have our personal details. In here, we can create a sub account. We can fix any kind of personal details in our account. In here is trade. This is where we are. Underneath, we've got positions. If I'll go to positions, I can then modify further my positions to my according to my strategy. In here, we've got orders, any kind of pending orders we've got. In history, it speaks by itself. And signals, we're going to have a look at that quickly. We'll understand how we can use signals, just the basic procedure. So if I'll click here on signals, there, by the way, there are two ways to use the signals in our website. One way is from the outside. As you can see, they are, if I click on here, it throws me back to the default screen. And in here, we can see those blue lightning icon in here, which means that the instruments that has that, those are instruments that has a signal. And as you can see, not all the instrument has. Dash, for instance, doesn't have it. Ethereum has. EOS doesn't have it. The Mini doesn't have it. So as we can see, when we do want to use the signal from in here, all we gotta do is just to click on the icon, and then it appears to the right. We can further extend the chart, and we can further choose which scenario we want. And based on the support and resistance that are displayed in here, we can roughly estimate what will be the take profit and the stop loss, which will be placed for us automatically. Which means that, for instance, if I'm going to go with the sell type, as you can see that is displayed in here at the upper left, there is type and it says sell. If I'm going to go with this recommendation, I'm going to click here sell. We can immediately see that the take profit and stop loss are placed for us, and we are basically ready to go. We can click here sell, and we're going to open the position with the stats we've got in here. Although we can make all kind of modifications to what we want. So for instance, if we want to take the take profit further down, then we can see that we can potentially make a little bit more. If we'll take the stop loss a little bit higher, that means that we can maybe increase also the possible loss. And if we'll take it further down, we can also minimize it. The point of me showing you that, guys, is even though we're using a signal, we can still make the necessary adjustments as we want, including the lot size, of course. We can increase the lot size if we want. So we can basically use the signal as guidelines. But if I bluntly want to take one of the signals and use it as it is without doing any kind of modifications, all I got to do, let's go into the signal section. Okay, so I'm clicking in here. Now we've got a linear list here with the newest to the oldest. So the newest will be at the top, right? Going down will be older and older. And we've got here the stats that we saw earlier when we clicked on the blue lightning icon. In here, we can see at the top, we've got NASDAQ, this is the symbol. We've got type, which is a buy. Entry price is allegedly where we would have entered into the position, but in theory, this is basically where the signal was primarily analyzed. So we can see there are values here, take profit and stop loss, okay. We'll click here on view signal, then we can expand the chart, and then we can see oh, there is a complaint about not getting audio from Shamile. I hope that everyone else can hear me properly. Can is my volume, is it still in a good level, guys, or there are other people who can't hear me properly? Okay, there is another complaint here from Jania that the sound is a bit low. Okay, okay, I will increase the volume. I don't know what the what the issue is, but I'll increase the volume. I hope that it helps. Shamila, I'm gonna write to you, check your sound settings. I really have no idea. All right, guys. So as we're looking at here, this is quite simple. There is nothing complicated in here. There are the levels in here which we can compare and place on the chart further doing our analysis. In here, we've got a scenario that is a buy, and we're gonna just click here on buy. This way, we're using the signal as it is without doing any basically any analysis. Of course, again, if I would want to modify that, I can easily do it. In this case, we're gonna maybe modify it a little bit more. Okay, and then we can just click here buy, and we're good to go. What exactly is take profit and stop loss? Just to understand a bit better before we're moving forward, so you guys will understand how the signal actually works. We'll make it a little bit lower. Okay, and what's happening in here is basically the take profit is a pending order. There are a few types of orders. There is market execution and there is pending orders. As you can see, there are three types of, ooh, it's getting funky with this. What we're gonna do is we're gonna change to a valid time frame that we can see. It's also important to know, guys, that when you're checking a signal, you want to match the validity of what analysis that was done display to the right with the charts. Otherwise, what's gonna happen to you is what happened to me. We were looking at minutes and I was placing the values, but it just didn't make sense because the picture here and the picture here are entirely different. We can see that in here at the peak, we can get 22,452. And in here, we've got a higher level, 22,740, which in this picture, we can't even see. And why is that? Is because the validity here is daily. So each candle on the chart is a daily candle. So basically, we're looking at daily candles, but in here, we're looking at minute candles. So in here, each candle is 1 minute. Let me just quickly show you that. Yeah, I'm gonna show you everything about how to enable the crosshair, but it's important for me that you'll understand that bit. And since we're looking at minutes, we can see in here that this is each candle here is a minute, and in here, each candle is a day. So in order for us to see the same levels in here, all we gotta do is just click here on 1M, scroll down to 1D, and then we're gonna look at the same candle time frames we're seeing in here. Okay, now what I wanted to show you is what exactly the take profit and the stop loss are. So in order for me to show you that, what I'm gonna do is, just a second, maybe we'll keep it like this. Maybe this makes sense, a bit more sense. There we go. And what happens with the take profit and the stop loss? I'd rather maybe use a rectangle this way, it would make more sense. Of course, you guys don't have to do any of what I'm doing now, but I hope that with this example, it will help emphasize what the take profit and the stop loss are. So basically, as I was what I was explaining is there are different types of orders. There are pending orders, which are automated orders that we can place on the chart. And as you can see in here, the maybe switch to 4 hours real quick. There we go. And with these values that we see, I used a red rectangle and a green rectangle to be able to demonstrate the levels that are marked on the signal. So basically what we're looking at here are, maybe I'll customize it a little bit more. There we go. So basically what we're seeing here is if it goes up onto the green line, which is our take profit, we're gonna make 108 quid. If it goes down to 22,350, we're gonna lose potentially 70. So the take profit closes the position automatically with a profit. Stop loss closes the position automatically with a loss. How is this helpful? Well, since the pending orders are automatic, I can basically place it as it is and I can leave the chart. And even if I go away from the computer, whenever this position is going to reach to any of those values, it's going to close automatically, which is a huge, huge time saver. And if I am able to control, to have a good grip on how pending order works, I can basically automate my trading, not by definition for automated trading, but to automate my strategy in a way that doesn't require me to sit hours every day on the charts. All right, I also want to show you with the CHF here an example to what the signal looks like when it's not valid anymore. So if I'm looking at a signal for the Swiss franc versus the dollar, we see that the values for the take profit and the stop loss are not here. Why they're not here? Because the market has already reached a key level. And that means that the analysis that was done in here has already passed. And even if I'll try to go along with the sell type in here, we're going to click on sell. It's not going to allow us to have the take profit and the stop loss similarly to what we saw in crude oil and what we saw on NASDAQ. Okay, yeah. So basically that's how it goes. This is the signal section. It's super simple. I don't think there is a lot. It's quite straightforward. It's also important to mention that the signals are provided to us by the Trading Central and not manufactured by AviTrade. Now, since this is support and resistance is great, but it's under the technical analysis umbrella. And as I always like to say, there are two types of analysis, which is technical analysis and fundamental analysis. What are the differences? Basically, technical analysis will be everything's related to the data that we can get from the charts. So that will be statistics. This will be averages, support and resistance, pivot points, and so on and so on. This will be the technical tendency. So this will be maybe the how the market is moving. Fundamental analysis will be articles, will be news, decisions, God forbid wars. Okay, we can all see how crude oil is drastically changing in the past 24 hours, maybe I should say 48 hours since the ceasefire between Iran and Israel. So there are lots of economic fundamental changes that has different impacts on the market that can help us contribute a lot of inputs to our fundamental analysis, and we would probably want to pay attention to it while doing our analysis, since the how from the technical analysis is not enough. I also need to know the why, right? And if I know the why the market is moving, then I can further add the how layer, or vice versa. It's really open for your guys' interpretation, but that's basically a nice way to explain it. Now, how can I get fundamental analysis? Let's say that we're using the signal for technical analysis. In here at the bottom, under the, in here that looks like some kind of, I don't really know how to describe it, but the news section, as you can see, also provided to us by the Trading Central. And to the right, we've got various articles which we can go through. And it's very straightforward. We can see the pre-European market brief, and at the bottom of it, we've got the instrument, the related instruments. So if I'll click in here, we can see that the basically the related instruments. Okay, and we can understand what this article is about. Now, if I'll go further down, we've got here the discovery, and in discovery, we've got even more fundamental analysis inputs, which can be via the market buzz as an example. Market buzz is aligned this way with those bubbles, but we can always change it to a regular table if we want. We will immediately see that in the middle we've got Tesla with the biggest bubble, which means that it has the most dimensions, so-called being popular, okay, online. We've got here Apple, we've got here other things as well, but let's go with Tesla for the sake of the discussion. Okay, and we can see that there are various filters in here which we can filter and specifically focus on the topics that we want. So if at the moment Tesla is facing a lawsuit, which is obviously a negative thing for any company, basically, we can this way specify which articles we want to go through, and with that we can further enhance our fundamental analysis. There are other parameters in here which you guys can explore, but I really don't want to delay about it too much. Just show it to you in a nutshell, then carry on with ease. The last thing that I'm going to show you for that segment will be the economy calendar. And the economy calendar at the bottom of this list as well under discovery. If we'll click on economy calendar, we're going to see that the economy calendar is built with filters as well. But first, we're going to click on reset to go back to the default screen. And in the default screen, we see that everything is gray. What does that mean? It means if we scroll down, it means that everything above the red line, which is a little faded white, it's not exactly gray, but you get what I'm saying. Everything above that red line is basically things that already happened. Another way to confirm that is we got the result. How can something have the result before it happens? This is also another sign to know which events we're looking at. If the events we're looking at are a past event or something that didn't happen. We can also see the time stamp. And we can see that the way that it's constructed is we've got the previous result, we've got the expectation, right? The forecast, we call it in here. And we've got the result, which is the actual. We can also see how powerful we think that the impact is going to be on the market. But since we're looking at this list and we notice that there are lots of various events in different levels and different impacts for different currencies, and we don't necessarily want to see all of that. What we want to do is maybe focus on the dollar as an example. So I'm just clicking on the flag in here. And what else? Maybe the yen. And I think that's enough. What this will give us, it will specify the events for the marked date. But since we're only looking at the 25th, we can't see anything. So what can we do? We're going to click on the 25th. We're going to click on the arrow for a week away, and we're going to click here again on the 2nd or the 9th, and then we're going to see this blue trail coming from the 25th all the way onto the 9th. What that means is that now what is displayed are the dates that we choose, and we can immediately see that there are other levels, other various events. Now, there are other levels in here. What if I only want to focus on the major events? What I need to do is I need to click here on high, then it will display only high impact. One more thing before we move, I know you guys want to move to the second part, to the practical part already, but one more thing that I'm going to show you on the calendar that I think that is extremely helpful, and this is the feature here, add to calendar. Why do I think that it's so great? Because it allows us to book the event onto our personal calendar on our phone. And this way I don't have to remember when was the event and when I wanted to analyze, and during my day I just book it onto my calendar. I have a nice reminder, then I can go to the chart, do what I need to do. Okay, this is why I think that it's great. Now we can finally begin the practical part. I'm sorry to keep you guys waiting. Of course, if there are any questions for anything that I said in the first part, feel free to fire away. Let's maybe get rid of everything we have here. Maybe crude oil seemed interesting. As I said, since the situation in the Middle East. So crude oil. Okay, and we will also open the chart. So there are two ways to open the chart. One of them is through commodities, then energies. And in energies, we've got crude oil. It even has a signal. We're going to click it to open the chart. Then we're going to click on the two arrows to expand the chart. We can see this huge gap. We can see that if we change from hours to days, then this is now daily candles, and 2 days ago crude oil dropped drastically. It rose, then it dropped drastically. If I'll click on the column price, click and drag down, it allows me to squeeze the chart. Then I can also click in the tiny arrows to the right and place a price line where I think that the support and resistance are going to be. We saw in a nutshell what support and resistance are just from what we saw in the signal. But we didn't understand completely what it means, but we're going to learn it right now. Well, not right now. I first want to give you a guide through about the toolbar here so you will know how to use it and compose your position, but then I will explain. So in here, we actually have a search bar. We could search anything we want. As an example, select it from the list. It's imperative to know that if you use this like that, you should make sure that your order entry is displayed correctly, because if you switch in here, it doesn't change in here. What you need to do is you need to again click buy or sell, and then it will correct and display the right one. So again, if we go back to crude oil, it's going to stay on NASDAQ, and we either have to close and click here again, or we can just click here again directly and it will display the proper order entry. With this in mind, where we have here some parameters, we want to understand what they are, but we're going to first finish with the toolbar. Keep going to the right. We have here, we already saw that, the time frames. We can change the candlesticks to a line, but the line gives us less depths in terms of the analysis we can get from the candles. So the rectangle we have in here used to show a reversed hammer tail, which doesn't exist on the line, but now it does. So we're gonna keep it with the candles. In here, we can enable the crosshair. If we move across the chart, there is no data coming from the candles. Why is that? Because the crosshair is disabled. If we click on the crosshair, we immediately see the necessary data. Going to the right, we have here different layouts. We can have 2 charts, 3 charts, even 4 charts. We can analyze a couple of instruments simultaneously. If I keep going to the right, we have here indicators, which I'm going to show you anyway, so there is no point wasting any minute on that now. The next thing that I'm going to do, or maybe the first thing that I'm going to do, is click buy or sell to enable the order entry, and the lot size I'll change to 0.01. Why? Because we can always increase according to what we want. Next thing that I'm going to do is I'm going to analyze what's happening in here. Basically, support and resistance are boundaries that I can imagine on the chart. Support will be the so-called floor or maybe the ground, supporting us from falling any further. And resistance will be what resists us from going any higher. Resistance. This will be the roof. So if this would have been my room, we've got the roof, the ceiling, and we've got the floor. Now, as you can see, I've marked several levels in between to help estimate approximately what I think that will be the range that crude oil can fluctuate it across. This will be the support, 60. We even have a lower one, but it's less relevant for us at the moment. And we can, maybe we can target 60 as our destined take profit. One more thing, when we are buying, our intention is that the value will increase. So as we said, take profit that closes the position automatically with the profit will have to be in a higher level. When we are selling, it's the other way around. So if it goes higher, we're going to have a loss. If it goes down, we're going to have profits. So when we buy, our intention is that the value will increase. And when we are selling, we want the value to decrease. This is why I've switched with red at the top and green at the bottom. If at the moment I'm targeting 60.20 to be my take profit, let's paint it in green. And I'm also going to place it as my take profit, 60.2. Now I want to validate that this is a price that I can really aim for, because maybe it's too far away. Who knows? And also, I need to acknowledge the possibility that crude oil is going to turn around, since there is no assurance that crude oil will keep going down, even though we see, okay, we see 1, 2, 3. This is the third bearish candle that it's going down. But there is no assurance that it will keep going down, as we see that crude oil has stopped. And I believe, without being too specific, that the so-called peace in the Middle East has something to do with it, since now to transport oil is a bit, can be done more efficiently. Okay, so how am I gonna, what can be done in here to make progress? What I can do, if I'm targeting this 60.2, I can see that the possible with the minimal lot size is $50. Okay, well, it's not exactly what I intend to make, not with $10,000 account. So I'm gonna set a different target, and my target is gonna be 500. And also, I think that making 500 in a day is a bit ambitious. So I'm also gonna change it onto weekly candles. And with weekly candles, it kind of makes sense. Let's keep it time length. Let's make it 1 week. And then the next thing I'm going to write down to myself will be the movements, because we're targeting a price from where we are. It's almost 65. So we'll click here on execute when price hits. We'll put 65. So we spoke about pending orders. This closes the position automatically with a profit. This closes the position automatically with a loss. And execute when price hits does what it does. It executes when the price hits. And the reference is what is here at the top. We've got sell, so it's going to sell. And if this would have been a buy, it would trigger it as a buy. With this in mind, when I'm at 65 and I've targeted 60 to be my take profit, let's make it a flat 60. We can see that if it moves $5 down and we have 10 barrels, we can make $50. But again, the point here is that we're trying to make 500 and not 50. Okay, we'll modify this as we move along, but at the moment the movement is unknown. One more thing that I want to know is how many barrels we actually need. This way we've got the target time movements in units kept for us to maybe reuse with another instrument later on. Now we're going to keep it like this. We're going to look at the chart and understand a bit better how we can validate the 60 here to see if it's really a good price to aim for or it might turn around. How can we do this? First, what I want to do is I want to know how much can oil move per week. This way I can have an estimation if by the end of the week it's going to get to here or it still has some time to consolidate. So what I'm going to do is I'm going to look at the previous week. We're going to see that the numbers for the previous week, if I point in here as 16 of January of June, that was a week ago, last week. And if I'll jot it down like this, we've got the open 72.69. We've got high of 77.04. Low of 6784 and close of 76. So 72 we said is the open. This is our high, this is our low, and this is our close. What does that mean exactly? Open price is when the market is started, has opened. Close price is what price the market is closed with. High is the highest for oil and low is the lowest for oil. And what we can do in here is we can subtract from the highest level to the lowest level, and we can compare the differences to know how much it moved. Although even if we use this primitive technique, I know that it doesn't sound too good that I'm calling it primitive, but we can use an indicator to do this for us. So the difference between the high and the low is 9.23, and the difference between the open and the close is less significant. And we can see that is, just a second. Okay, as we saw, less. Now, how can this help us? The problem using this methodology is that even if we strip down the numbers from the candle, it doesn't give us an average. It just gives us the numbers from last week, but it doesn't mean anything about the average of crude oil. Since crude oil has different size and different shapes of candles, if we go backwards, we see that this one is bigger than that, this one is bigger than both. Here we've got smaller than each of those. This one is even smaller. So basically what I'm trying to tell you guys is for this calculation to actually mean an average, we need to accumulate many more candles, which is extremely time consuming, and we're not going to do this now on the webinar. What we're going to do instead is we're going to click here on the indicators, and in type to filter, we're going to type AVE for average true range. We're going to click and drag it to the right. In here, we can simply choose the length and choose basically how many candles we would like to withdraw the average from. So now it's 14, that means 14 weeks. 14 weeks is roughly 3.5 months, which I think is a little too far away since we see that the segment has changed. I think 6 or 7 kind of makes sense. So we can, a month and a half is more reasonable. We're also going to change the color to something that doesn't confuse us, like yellow, and we're going to click on save. Now, with this in mind, we have an estimation how oil can move per week. So I'm going to jot down in the movements here that the ATR is really 7.0435. And how far away is the price we targeted? We targeted 60. Okay. Well, what do you say, guys? Is the price we targeted is in our range or out of the range? Range for crude oil to move per week is, as we said, 7.0435. And the entry we said is 65. Take profit, we said that it's going to be $5 away, which is 60. Okay, $5 away. And we can use the same reference vice versa to make the stop loss at 70. Also $5 away. Now, guys, is it in our range? Is it in our range, this take profit and stop loss, or it's too far away? What do you think? This is our range. The range is this, and this is how far away we targeted the take profit and the stop loss. Let's make it a flat 70, right? So who thinks that is in the range and who thinks that it's out of the range? Bernard, very good. Okay. Who else thinks that this is in the range? This is the range, guys. This is how much oil is moving per week according to the past 7 weeks. Now, if this is our range and we targeted a take profit only $5 away, of course we are in the range. If we would target something that is farther away, then we could assume that it might take it more than a week to get there. But since it's in our range, we can assume that within a week, it's possibly gonna get there. Okay, carry on down. Of course, it could also turn around, but if it goes down, it's definitely in our range. Excellent. And now in the units, we need to choose how many units we need. So for this, we have a quick equation which we can use, and we're gonna go target divided by movements equals units. And if our target is 500, we're gonna divide it by the units that we have. The price difference, sorry, the movements, this is also known as price difference. Okay, and who can tell me how many units we need to make 500 and not 50? Currently, we're making 50 since we have 10 barrels and we are $5 away. But we want to make 500. So how many units we need? Who knows? How much is 500 divided by 5, guys? Okay, I'm gonna give you guys another 10 seconds to answer. I already see some correct answers. Very good. Good job, Nina. How much is 500 divided by 5, guys? Who knows? Let's do it together with a calculator here. Of course, whoever wrote 100 is absolutely right, 100. We're also gonna place the numbers here to see that it makes sense. So we're gonna put 100 here and just quickly see that is perfect. Okay, great, 500 and 500. We're looking at a 1-to-1 ratio. I'm not exactly sure that this is what we're looking for, so we're gonna make the necessary adjustments. But at the moment, it does seem like the numbers are aligned exactly as we wanted. So we're gonna put 100 here and we'll put 100 here, and this is perfect. Now, what is a reasonable ratio to work with if not 1-to-1 ratio? What is a better ratio? Who can give me an idea for a better ratio? So we can modify, we can adjust the ratio to be a bit better. Because at the moment, the situation we're looking at is possibly making 500, possibly losing 500. This is not always what we're looking for, since if we choose to diversify and we use this ratio with several positions, okay, so 1-to-1 ratio. Okay, so we've got here a suggestion, 1-to-2, excellent. 1-to-3, okay, Ivan suggesting 1-to-3. Who else wants 1-to-2? 1-to-2 is easy to do. I'm gonna show you a nice trick in a moment. Okay, 1-to-2 from Matthew, okay. Gail, very good, very good. Okay, so I guess we're gonna go with 1 to 2. 1 to 2 is easy to do. I'm gonna show you exactly how to do that now. Okay, also I'm gonna write in here Pam equals $5 since we're looking at $5 and not 7. And how can this be done? Well, very easily. Since the $5 away is what we targeted, we can just divide it by half, right? And that gives us 2.5. So basically, what we're looking at in here is movements times units equals possible profit or loss. This way, if we're going to look at the 500, but we want to make the 500 to 250. So how did we get the 500? 500 is 5 times 100, right? And the 250, what we need to do here is 2.5 times 100. Okay, we could also change the load size. We could do that if we wanted, but the problem with that is if we change the load size, it will also affect our take profit. And then the analysis that was done in here is not going to get us to the number that we want. In this case, what we're going to do is just divide the difference, the length for our stop loss by half. And instead of being $5 away, we're going to push it to be $2.50 away. So we're going to make it, if we have 65, so we're going to go 65 plus 2.5. Great. We're going to just take that and put it right here. Great. 250. Exactly as we wanted. And now we're looking at the ratio that was suggested by the audience. Okay. Any questions, guys, so far? Any questions about anything that we did? We still have another 7 minutes. I'm happy to answer any questions that you guys have about this process. Any questions at all? How is this? Okay, so Amelia is asking, how is this ratio effective? Amelia, thank you for the question. I will explain to you how this ratio is effective. So let's suppose we're going to take several positions with the same ratio. And at the moment, we're looking at possible profit of 500 and possible loss of, this is a great question. Okay, take profit. So this is possible profit 500 like we wanted, and the possible loss is 250. So we've got possible profit and we've got possible loss. Now, if we're gonna take several positions with the same ratio, okay, we've got 500 and we've got 250. And we're going to go for another 5 positions like this. And then the possible profit is going to be 2,500 and the possible loss is going to be half, right? In this case, if one of the positions, if out of the, where is the calculator in here? Okay, if all of the positions are losing, I'm going to lose possibly 1,250, right? Again, to explain what we're doing here. If we take 5 positions with this same ratio, possible profit is 2,500, possible loss is 1,250. The logic behind this is enough for one position to trigger with the profit, and then I can possibly compensate the other positions that I lost. If I go for even more aggressive ratio and I'll divide this by 2, making it 125, okay? As you can see, that means that for each position that I'm able to trigger with the take profit, I can allegedly lose 4 positions. Now, again, I don't like to make this comparison using hypothetical numbers, but since Amelia asked, and you asked correctly, what's the meaning of adjusting the ratio? Because if I would work with 1-to-1 ratio, and then I can possibly lose and gain the same amount, there is nothing that will compensate from the other position that I'm taking if I choose to diversify. I hope, Emilia, that it makes sense. Of course, guys, if there are any questions, feel free to fire away. The last thing that we're going to do before we're going to say goodbye is to ensure that we have the margin, we have the availability to open the position here. Now, as we can see, the price per barrel for oil is 65, and the number of units we're taking is 100. And if we're going to go price per unit times number of units, we get the value. Okay, in this case, since we're using the web trader, this been done for us automatically. And we can see that the value is 6,500. Great. There is also something here called leverage. What the leverage does is just a multiplier. So basically the leverage is multiplies buying and selling, giving us the ability to take more units with the same balance. And the leverage here is 1-to-10. That means that with the same logic, I can just divide the value by 10. And this will give me the necessary amount to open the position. So basically, I can go value divided by leverage, and this will be the necessary amount to open the position. Why is that important? Why is Danny showing you that today? Because when I'm opening a position, I want to ensure that I leave. Of course, Kenneth, that it's recorded. I also understand that the practical part went a bit swiftly. But again, guys, the purpose of this webinar is to get as practical as I can and to give you things that you can actually use and not just to tell you here stories. So you can, again, watch it at your own pace as many times as you want to, as much as you need. Okay, so we're looking at here as I said, at crude oil, and we noticed that the price per barrel is 65, and since we're taking 100 units, we were supposed to have 6,500 to be able to take the position. But because we have leverage and we are multiplied by 10, we only need 10% of that. So we can divide the value by the leverage, and then we get the necessary amount to open the position. Margin impact, which in this case is going to be 650. Of course, we can easily take the position using let me tell you exactly, using 6.5% out of our total capital. Yeah. Okay. Yeah. That's basically it, guys. I wanted to tell you that this is a procedural methodology, which means that you can erase whatever numbers that are here and use it as a template if you want. I hope that this webinar was useful. I hope that you guys were able to pick up something useful to implement in your own strategy. You're all welcome to join us tomorrow with a live Q&A. Until then, I wish you all a wonderful week, a fruitful week. Best of luck with trading. Come join us next time and have a good day.